Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to another edition of the Grain Feed, brought to you by Ever.Ag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers. As a risk, I'm your host, Tim Matthews, reporting from the Chicago home office. On back to being cool and wet yet again. We had 80 degrees and sunshine and Canadian wildfire smoke for maybe a day or so. Felt like good old-fashioned Canadian wildfire summer again there for a minute, but back to 50s and rain. Can't speak for Wichita, Kansas, though, from which the director of Feed Foundations, Mr. Jake Kingsley, is joining us today. And from Madison, Wisconsin, Dairy Advising Director is Katie Burgess. Team, how are we today?
Doing pretty good.
Hey, Jim, doing great.
Excellent. Jake, how's the weather in Kansas? Keeping an eye on that wheat crop?
Yeah, it's beautiful today. We caught a few inches of rain yesterday across a wide swath of the state. We're supposed to catch some more tomorrow. I think there's going to be some wheat that was getting close to ready that maybe didn't need quite as much of that rain, but it got it. So we'll see what that does to quality. We don't usually start harvest till right around Father's Day weekend here, so we got a week and a half or so.
Okay. All right. So we got to keep an eye on that crop because the screens were a little green on the grain and feed side today. So we got to pay attention to what's happening in wheat. Katie, what's going up across the border here? How's Madison?
Beautiful today. We got some fresh peonies just out of the garden during my lunch hour today. So spring is here. Summer's in the air. I know talking to my parents up closer to Green Bay, I mean, they're busy in the fields, getting the end of the corn planted, soybeans, making first crop hay. So really busy up here in the dairy state.
I bet it is. And just for the record, peony, my favorite flower. We usually get them around Memorial Day. I feel like things were a little bit late this year. My mom is sending me pictures this week as well from her garden, and maybe we're a week or so behind, but you got to get those little ants out there eating away, right? That's what helps them blossom, bloom. It's nice. Little peony fact for all the listeners out there, little peony fact. Jake, did you know? You got trees in your room, Jake.
I am learning right now that I did not know what peonies were. I thought they were a much smaller little flower that overwinters pretty well here in Kansas. And so now I'm going to have to ask people what those are.
Well, you'll learn something new every week here on the Grain Feed. Is it relevant to your dairy operation? You'd like to say it might be slightly, but we're going to get to that here in a moment, to what's relevant here at the farm. But first, Paige, if you would kindly timestamp the broadcast. It is Wednesday afternoon. It's about 3:15 Chicago time. As I referenced, the screens were a little green. Here at the board, we had Dees corn up 5 1/4 cents at 4.43 3/4. So we're back in the 440s at least at the moment for December corn. December wheat, since Jake is watching it in Kansas, was up 6 1/4 for Chicago wheat at 5.79. Kansas City wheat up just 3 1/4 at 5.75 Novi beans up 3 1/2 at 10.25. And December meal, that stubborn little byproduct, is holding at 2.10 higher today at 3.0860. So not incredibly green. Corn was up, let's say 1% or so today. Meal was a little less than that, but green is green. So it's something we have to keep an eye on as we head into the first half of the month of June, which is hard to believe that we are there. And we'll have a WASDE report next week. Got a lot to talk about at the end of the month with an acreage report coming up. But let's talk about the output side of this thing with Miss Katie Burgess. Katie, there's actually a lot happening in the milk market as of late, at least looking at my class 3 board at the moment, because on the feed side of things, we've been saying no news is good news. Things are pretty steady under pressure, moving a little bit sideways. That class 3 market has not been super sideways. We've seen some moves here. So what's been happening there?
That's right. The class 3 market has been really volatile here over the past 2 weeks or so. And it's a little interesting that when you look at the spot cheese market, so spot blocks, that has actually been fairly sideways. Of spot blocks have been trading, we'll call it from 190 to mid 190s. Not a lot of action there. But when you look compared to a week ago, the spot block price is down a penny. The class 3 July futures contract is down more than $1. Last week, the market was really excited about where we were going to go. When you look at where spot cheese was versus where cheese futures and class 3 futures were, we were pricing in a lot of premium. The market itself was projecting that, is spot cheese going to make it over $2 sometime by the time we get to mid-June? But as the days rolled on, the spot cheese market just hung out in the 190s. And now we've kind of flipped the opposite direction, that we got to the mid-190s, we got stuck. Futures looked at all that premium we'd built into the forward curve and said, well, if the spot market's not going to make it to $2, we probably shouldn't be trading $2 cheese. And with that, we took July milk, which did trade above $20 per hundredweight, is down to $18.92 today. So off quite a bit. And the class 4 space hasn't been without volatility as well, particularly in butter. Last week, we had a day where butter futures were limit up. We had a day they were limit down. Today, we traded limit up after settlements. So lots of volatility in the class 4 space as well. And I'd urge producers to take a look at it because September through December class 4 contracts are back up above the $20 price point. And a lot of that's due to the fact that the butter market, while it's been volatile, has also generally been higher compared to where we traded most of the prior 3 months.
So, Katie, looking at the difference between these class 3 and 4 markets, then, I mean, we've had some opportunities here given volatility, and volatility does often give us an opportunity to either play some new positions, if you will, in terms of managing risk and or take advantage of what the market has given us with current positions. When you approach these two different markets, where do you think the most opportunity is just today, June 4th, as we look at this thing? Where should we be stepping in on each one of these?
I feel like right now it's a good time to step in on both. So one of the things I'm going to be watching this week is tomorrow morning, so Thursday morning, we get export data. U.S. prices for cheese and for butter are the lowest in the world. So I think it's going to be really interesting to see how much cheese did we export in April? How much butter did we export in April? I think the numbers are going to be pretty big, but the scale of that will tell us where they're going to go. But at the end of the day, I mean, dairy producers have a lot of nice options, whether it's dairy revenue protection insurance or LGM insurance on the class 3 side, that sure, the class 3 market is off the highs, but producers are still able to protect levels that are above cost of production. So I feel like that's still a good idea. And then on the class 4 side, we are at the highest prices we've been in that market dating back to February. So again, we're back to a level that feels like a good opportunity to go out and lock in some margin for later this year.
Yeah, and you talk about that margin too, Katie, because the feed side has largely been sideways under pressure as we kind of led the show talking about those markets briefly. But yeah, as given opportunities on your milk pricing versus feed largely remaining sideways, we have had an opportunity for that margin. So if you have questions on how to better manage your risk, please reach out, talk to someone like Katie Burgess. And with that, let's turn her to the feed side then, Jake, because we do talk about these prices under pressure. We can try to manage risk and take advantage of some opportunities based on board pricing, but we have our lovely feed ingredients that are not always hedgeable at the board. And one of those little suckers is cottonseed. What's been happening with cottonseed, Jake? You've been talking about it for a couple months. What's happening here?
Well, price continues to kind of grind a little bit higher here, at least in the new crop window. I think it's popped quite a bit higher in the old crop if you haven't cleaned that up and still need something between now and, say, October or November for new crop ginning season to get going. That stuff has gotten expensive in a hurry. The expectation is that most of these gins will be out of inventory a little earlier, completely cleared out ahead of harvest. And right now, veg oil values are driving positive margins at these crushers. So the Texas Panhandle has a big cottonseed crush facility that they're going to try to scrape by with whatever they can get until harvest. And then they're going to buy up probably just about as much as they can get their hands on when ginning season gets going and there's new crop product flowing their direction. So prices are firm right now. Thankfully, the Texas Panhandle has had pretty significant rainfall, really good soil moisture. That crop's probably off to a pretty good start at this point, but it's got a long ways to go. And, it gets pretty hot and pretty dry over a long stretch of the later summer months in that part of the world, and they've suffered from that tremendously the last couple of years. So they'll have to avoid a repeat of that to put together an ideal crop to keep prices at current levels or start to suppress them. I think it's going to be hard to drive it a whole lot lower than we are today. We could see something as harvest gets going, but demand doesn't really seem to be going away. You've got the crushers looking to produce oil, so they're going to buy it. I've been talking with dairies all across the country for a couple of months now, and the conversation has been, if you're going to feed it, we probably need to start buying it. And if you're not going to buy it at these levels, you should have a conversation with your nutritionist about how much of it you're going to pull out of the ration, or are you going to pull it all out and replace it with some other commodities? There have been many dozens of these conversations now, and I think on the whole, we have one or two dairies reducing inclusion. Virtually everybody else is continuing to feed what they've been feeding the last few years and stepping in and owning feed. So demand doesn't really seem to be going anywhere. It's really going to be a question of where does supply land at the end of this thing. And we got a long ways to go to get where we need to be on that. So a little bit of concern there. I think one thing that we have seen positive light on the feed front this week was we got another opportunity for corn futures pushed down towards contract lows. Folks that had not already got yet another look at putting on some nice coverage while markets were suppressed there. We've bounced a little bit off the lows now, but it's nothing ugly, nothing you can't step in and still do a little bit of work on. I think part of that was that we've had pretty good success with planting this crop, and we had a few inches of rain across most of the state of Kansas yesterday. I think we're expecting some more again tomorrow. There's some places that are getting a little too much, but for what it's maybe going to have a negative impact on the wheat crop, I think those with corn in the ground appreciate it quite a bit. We've been in a pretty healthy drought across most of the plains and some portions of the western grain belt, and most of those folks caught significant relief in the way of precipitation over the last 2 weeks now, and this crop's looking really nice. So we're managing some concerns on some high priced ingredients, but corn's looking pretty nice. Basis across most of the country is now creeping down towards some of the lower levels that we bought last year. There may be some folks starting to step into the first little bit of that. I would argue with the size of the crop that we've got, especially in these rail dependent markets, if we do end up with the yield that we're estimating and the acres that are supposed to be in the ground now, we could see further pressure on this corn price yet. But still a good place to step in and manage your topside risk while you can. And then on the other side, for protein, we've had a lot of time down here around $300 soybean meal. Futures wise, we've had a lot of folks take advantage of that on a significant portion of their needs for next year, buying physical feed for next year because basis has actually broken below some of the lower numbers that we bought in this previous feed year. So cash values are very attractive. They're probably in the bottom 15, if not 20% of at least the 5-year, maybe the 10-year average price on cash values for that stuff. So good opportunity there. We've seen that one perk up a little bit. I think soy oil values have drifted off of their highs around 52 cents down to 46 cents a pound. That's taking away from the profit margin at those crush plants. And of course, those folks are getting ready to take downtime for repairs and maintenance. And so we haven't seen a huge pop higher in protein, but futures are now trading kind of in a sideways range, call it $5 higher than they were for the last month and a half. Basis is perked up just a little bit off of the lows. And so still a nice place to step in, but it is showing signs that maybe the bottom is in for a little while here until fundamentals tell us that they really want to drive it lower. So good opportunity the last couple of weeks. Nice place to step in and start to manage some margin on the dairy front.
Good deal, Jake. Thank you for that. And yeah, just like Katie was mentioning, between, class 3 and class 4, where we might have opportunities on both of those markets, I think you have opportunities in both your corn and protein markets, right? Between corn and meal at the board. You mentioned that we've been kind of testing the same lows and the same range for some time. I could argue December corn coming down and touching this 435-ish level multiple times over the past couple months, and December meal down in this like 305-ish area, testing these lows multiple times the past couple months. At some point, it just kind of psychologically establishes a floor, I suppose. And when managed money is looking at this thing and wondering, where do I ultimately de-risk and or take profits, they start to see this floor kind of taking place and setting itself as a mechanism there to say, okay, we've hit that again. let's take some risk off the table again. And weather's not perfect in the Midwest. It's been pretty stinking good, but it's a little wet in some areas. We're still planting, as Katie mentioned, in certain parts here east of the Mississippi. So it's not over yet. Things have looked pretty darn good, but it's not over yet. We got to get through June WASDE report late next week. We got to get through that acreage report at the end of the month. And then I know it's never actually knee high by 4th of July anymore. It's more like, Jake's and my shoulders high, maybe head. We're not super tall people, but it's a lot taller, a lot sooner than it used to be. But that being said, there's a lot of opportunities here. Please reach out on the feed side to Jake Kingsley and the team if you have questions. But in the meantime, we were supposed to keep this crisp for Paige, and now she's going to be angry because she's always fed up with us because we always talk too much. But we got to wrap this thing up, you guys. So a huge thanks to Jake and Katie. Katie, thank you very much for being here.
Thanks for having me.
Absolutely. And also Katie, fellow ice cream lover. Really good stuff on social media lately. We'd also like to thank the Ever.Ag Insights crew for their support. Thank you to Paige for production magic, and thanks to the viewers for watching the Grain Feed. Contact information is on the screen. Greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.